All
Let's
right.
get it.
Yeah, nah, this is very interesting to see. We are looking at a new era of money. I never would have expected us to see some stuff like this. I know we've talked about this offline, off live for a little bit of time, but to see us raise 2,000 points in a matter of a week is almost criminal. I'm here to hear your thoughts, good sir. What are you seeing when you see a chart like this? And we're at this very top end. And in the last couple months, since when Trump announced his tariffs, right, we were down at 16K, right?
Yeah. I mean, for me, when I'm looking at something like this, it's always interesting because one, we never really know how high we can go up until until we kind of hit it. And so my thing is like it's always, and I want to actually just see something really quick because I'm not sure how far we are removed from the 5 EMA on a daily.
Mm-hmm.
So I do want to just do a quick gut check because yeah, we are somewhat overextended from that 5 EMA, and that's currently sitting at around 25.9. So to come back down and tap it, I don't think it would be out of the question to come back down to about that 25.9. The real thing is, to your point, for us to have rallied, 2,000 points in a matter of a few weeks is pretty insane. To go from 2,400 to 2,600 is like, how do we even do that from 24.1 to 26.1? That's pretty insane. Because all in all, I mean, that's a 9% move. And when you think about how much the average return is on the S&P, is it's around 7%, 8% annualized, something like that. S
Annually.
annually. And if you you could have waited all year long and bought at that drop, and you would have made that return over the course of a week or 14 days, whatever it is.
Yeah.
So yeah, it's pretty crazy. Within 1 month we can have such volatility. And my thing is, again, as we kind of talked about, it's hard to look at the market like this and say that we're supposed to be this high, but it's also difficult to say that we aren't supposed to be this high if we don't really understand the mechanism that's driving the price higher. And I think there's a few things that drive the price higher. One is obviously the dollar. We kind of thought that there was going to be some sort of um, event, some type of volatility event,
Yeah.
and maybe this Fed meeting just didn't produce the volatility that we anticipated. And so maybe kind of coming out of this, we do see, unfortunately, potentially more buying as people, you know, maybe have hedged going into a volatility event, and now they don't have a need for those puts anymore. So they close them out. They have to buy them. As they buy them, now it's like, okay, well, they're buying puts, they're closing them out. It's gonna push the market higher before it, comes back down. So
Yeah.
for me, that's kind of what I'm thinking through as I'm seeing price like this. I'm thinking about, again, all of the sort of mechanisms that could potentially drive the price higher, what could potentially make the price drop. But again, when we look at, as you have right now, when you look at those Fibonacci levels, and you can see that we're right at that 1.68, it's kind of hard to ignore the fact that we may need to come back to the 50% of that 1.68, that 1.618 level, and retest at least the 50%. So, for me, I'm not buying up here. I'm not looking at it as a buying opportunity when we have 2 months in this year left and we were able to produce over 8%, 7% in the matter of 14 days. It's kind
Man.
of crazy. 55% from April's low. it's one of those things where it's like it doesn't make sense to be a buyer all the way up here going into next year, especially when you look on your chart and you see that RSI diverging as much as it is right now on a daily.
Yeah,
So
yeah. No, I mean you make good points, right? We haven't seen things like this. I wouldn't, I don't throw it out of my mind right now to consider that this price is going to go lower, but how high is the sky? I guess that's one of the bigger questions. You would thought that maybe we would be looking at a pullback sometime soon. As you mentioned, the Fed rates were cut just recently, so it has at least some level of bearing that we should find our way back down somewhat soon, right? At the end of the day. But I will say this. So Jerome Powell, he made a interesting point when he mentioned the Fed rate cuts today. And the point that he made was that this isn't like the dot-com era bubble, right? Because as most of the market, right? We're not talking economy, we're talking market. It is based on speculation. Cool, wonderful. I'm here for it, right? At the end of the day, speculation is how you make money. Shoot, when you go into marketing, we understand, drama, brings in views, things of that nature. So when he was mentioning that, the dot-com era, a lot of the companies at the time weren't making money. It could be true, right? Because the internet was very new. A lot of companies were coming in just utilizing the internet, and they were just figuring out how this dot-com era was going to work. So there really wasn't any money to be made per se, because say for instance, there really wasn't any payment plans or payment companies like that, like your PayPal's and things of that nature now, that you can actually actively pay and utilize in order to make purchases of different software and things of that nature. There's still certain other mechanisms that you have to go through. And again, a lot of people bought into the idea of the internet, but not the companies that were going to be based on it at the time. Now, with AI, that does bring a different sort of monster into the threshold, because when you're talking AI, we're not just talking about, like your chat GPTs, where, oh, AI is cool, let me utilize it. No, they actually have payment plans. They actually have payment systems already in place, like various AI tools right now. In order to utilize them, you have to pay for them. So it gives me the idea that, and this isn't a knock at, say for instance, the Nasdaq, because it has in one respect, it has nothing to do with how these companies are making money. But what it does show is that, your companies like Nvidia, they are a major player in the current market game right now. And I mean, it really depends on who's actually buying their chips at the end of the day. But with all these data centers going up, like there are immense opportunities to set up an AI company, AI based company, and actually, start having cash flow based off of, just utilizing AI services. And so the data centers, the platforms that are hosting AI, they're the ones who are in my mind actually driving a lot of this, because they're the ones buying the NVIDIA AI chips and things of that nature. So when we see prices like this, and you made a point off live about this as well, but you could have 80%, 90% of the Nasdaq, S&P 500 go into the red. And if you at least have 10% that are front runners who have an egregious amount of market capital, um, you just going to see prices fly at the end of the day.
mhm.
What it begs the question to me, right, is, we talk about buyers and sellers at the end of the day. So, to the people who are, selling stocks, there's got to be a equal reciprocal buyer in that stock at the end of the day. The question becomes is, well, where is all this money coming from? Are we talking, this is fully based off of, 401ks of your peers, or it's coming from the 401ks of your parents, or um, you know um, I guess you could say any other place where, say, for instance, somebody holds a significant liquid investments to an extent where they can just throw money into the stock market. This is a scary time to be alive.
Yeah.
This is, in my mind, this is a time where the rich keep getting richer and the poor just keep getting poorer. I mean, we just literally have a government shutdown, so you're actively asking yourself, well, people aren't getting government checks like that to invest in, so clearly somebody has liquid cash to just throw into the market. And there's a lot of clearly there's a lot of sellers, I mean a lot of buyers into this market, driving prices up even with the prices as high as they are. I mean, you just talked about it. We went in a week. I mean, we can look at the chart right here. We can go back to as far as, was it the 25th of October, right? And mind you, these aren't even Hakanashi candles. These are regular candles. And we could look back at price at this point, and we could say, hey, how in the world do we reach a point of 24K, and then in a matter of a week, we're up 2,000 points, right? Like, it's stuff that we haven't seen before like that for an immense amount of time. Now, mind you, you can go back and you could say, hey, well, in the time of March, right? We saw us reach, 2,000, 20,000, and from March all the way down to April of the next month, we lost 4,000 points. Fair. That's absolutely fair. The question then becomes, if those are the same people who are investing in this current market, it clearly cannot be your average regular day person at the end of the day. First of all, prices are way too high. I mean, you're talking about 16K a share, right? In terms of the NASDAQ, in order to buy in regularly. So there's people with astronomical amounts of money getting into this, unless, say, for instance, you're utilizing a broker and you're hitting these plays with micros at the end of the day. So for me, the question becomes is, again, almost full circle, how high is the sky then? Are the big players that big where they can just throw money at this at the end of the day and still have a significant amount of money to hold on to? And when we're talking big players, we're not talking just individual people, we're talking households, families, right? Um, Hedge funds at the end of the day. If these are the players that are playing big in this game, how high really is the sky, right? If they start buying things up on the ground floor, like your houses, they're the ones doing all the development. If they're the ones who could buy, 5 yachts 10 times over, right? If these are the same players that we're talking about, at what point do you believe that we're ever going to see prices come back down to like the 16K again, right? Are we going to see prices possibly even come down to like 20K again for your average investor to look at? So we mentioned that price could still come down, but how far down before the big players scoop that up at a discount and then just drive this up to 30? I mean, we're looking at the curve here on the side, and it's not linear. This is exponential. It's exponential. We're possibly saying 27K by March 2027, and by the what is it 2030, we're seeing about 30K, right? 30K by the way that we're going right now, and you can build 2K in terms of just market, I guess, market going up. Why couldn't we hit 30K in the next year if this is the way we're going right now? So
Yeah.
it begs questions, bro. It begs questions because it sounds like again a very rich people type of play that we're seeing right now. And unless like you've already gotten in and found your your footing in this game before, I mean, you could look back at times past at the end of the day. We've been on similar type of bull runs, right? We've seen markets go up and they just sustain upward movement, upward movement, upward movement. But as you can see, even when we're going back down to 2023, that's only 2 years ago. 2023, only 2 years ago. And the only time we saw price come back close to those levels was in 2025. It's only 3 years. And mind you, it's more linear at that point in time. It's very much more linear at that point in time. This is reaching exponential levels. So I guess my question to you is, if we were making predictions, right? Do you see us hitting 30K by like 2028?
30K by 2028. I think it's definitely in play. I think it's definitely in play. Um and yeah, by 2028 for sure. For sure. I mean, cuz if you think about it, we again, like if we look at where we are now, we're at 26,000. It's crazy to say again. Again, by 28, I mean 30,000, that's 14 points away. And we just said we were able to move 14% away, 15% away. And we were just able to move 5%, 7% in a matter of, 14 days. So over the course of 600 trading days, 500 trading days, I think it's definitely possible. Um, how we get there, I don't know. Sure, there's gonna be some volatility in the mix, but even and here I'm gonna share my screen because I do want to just kind of highlight this. I know you use the fib levels and you kind of taught me how to use these, and so I ended up going from this low, doing the extension upwards from this low
Hmm.
to the previous high, and well, actually, let me move this down. Actually, just so this is a bit more accurate, because what I'm seeing from this is we are right at, we came right up to this monthly expected move, and we're just like slightly above it right now. And if we look at, we just kind of gapped over that 50% level. So from the zero, we came in, we went above, we came in, we went above, and like now we're at this 50% level. It's a huge level. So I mean, we got above this 50% level, what is 38.2 or 0.382 level, sold off, got above it, sold off, got above it, and we ripped. We haven't even had a chance to test this 50% level yet. So for me, I know we can come back and retest this. The question is, how quickly do we get here? Is it more of a consolidation to potentially go higher? Or, and then I guess then it becomes, all right, we didn't clear the 50%, by the end of the year, Santa Claus rally, do we hit that 26.5 or maybe even higher? That kind of leads us into or open up the door to that 27, 28K. And then when you start thinking about round numbers, right? Like the next level is essentially we're over that 25,000 level. We're at 26,000. So I guess a retest of the 25,000 level makes sense now. And I mean, again, it's a lot of confluence at that area. But again, if 25,000 is a psychological level, then the next level then becomes 30,000, right? And again, where does that put the S&P? Right? Where does that put the S&P when we look at, its movements, right? Does the S&P and the ES, does that become, the equivalent to what the NQ was, 6 years ago, 5 years ago, when price just continue to get more and more volatile, prices continue to rise. Daily movements they got a lot larger. So I mean, again, I think when we look at the average daily range of the NQ, it's about 400 points over the last 250 trading days. So on average, the average daily range, we move 300 points, 24 points, and that's not even including gap ups, right? So if we kind of zoom out to a daily, like we're moving 74 points, 100 points, uh, 57 points. So we are getting we're like price is expanding in ways that I don't think that we initially thought would be possible. But again, it's kind of like, here we are. Price is just moving on up. So I think 30,000 is definitely possible. How we get there, it's gonna be tough to kind of say we get there in a straight line, but I mean, it's once we see that low, like we never really come back to retest those lows. For in the most recent times. So do we come back and retest this low, or is it just something that we come back to retest all time highs, we hold, and then that sends us up, another 14%. So from here to here, or hell, 30%, it would be a 30% move, but you would have more sellers getting involved on that move down, and then would eventually have to buy at this this level. Then do you have more people, more buyers that sort of step in and want to accumulate around that 22,000 level, right? Like, I mean, we just talked about it. When will we see 22,000 again, right? And so if there was an opportunity, I could see people taking advantage of that opportunity. So I doubt we come back and retest these lows. I think once those lows are in, you never really get a second chance to come back and grab those the real lows, right? Came
Yeah.
back down. We've never come back down to the November 22 lows. It's just been up from there. So, it's been like that historically too. It's been like that historically. So yeah, I think for me, it's a matter of getting into the mind frame of stocks only go up. As crazy as it sounds, stocks only go up, and it's just a matter of time before we have a pullback. And not trying to predict when we have that pullback or when we will have that pullback, but just being ready and kind of anticipating that pullback to be able to jump in and grab something so we can continue to go higher. Because again, I don't think that we see these lows, right? If the theory remains true that we don't touch these lows, then essentially you have the opportunity to buy from anywhere within this pocket. I would say is a good buy. Anywhere within this pocket is a good buy.
You think we're gonna get back into that pocket?
I think we do. I think we do. I think it's more likely than not that we come back into this pocket. And the only reason why I say that I think that we do is because gaps always get filled. So we do have a gap right here around this 19,000, and maybe it's something that doesn't necessarily happen immediately, but I do think that we have a nice little gap right here that if this gets filled, then I mean it's a win for people who might have some levels kind of sitting right here.
Mm-hmm.
But I do think we eventually get back into this box. I mean, if you look at most price action, you kind of have levels get tested all the time, and this is just a level that really hadn't been tested on this run up. So we kind of came up, and none of this area down here was ever tested. Like we went up, and we never really had like a pullback specifically in this zone right here.
Yeah.
Specifically in this zone right here.
But
So
yeah, go ahead. Go ahead.
No, no, no. That's pretty much it. But yeah, I think we do come back and test the zone.
So let me ask you this because this has been on my mind for quite some time. Um, when we're seeing these large moves down, especially within the early parts of 2025. You can also see that in terms of mid 2024 as well. What are the companies that are essentially getting hit? I mean, you can definitely say for instance 2025, the election of Trump, and Trump announcing tariffs did a big cause in a lot of that, right? Now,
Hmm.
mind you, it was a lot of speculation. So, say for instance, it was a lot of talk on taxes that weren't essentially put into place, right? It was a lot as announcements of what could happen. So it's like a lot of people taking money out of your FANG stocks, right? Your Facebook, your Apples, your Netflix, your pretty much everything FANG, right? The question then for me becomes, well, what then becomes the precedence for stocks moving down again? Will it be another speculative event at the end of the day? Because we were talking about this potentially, maybe not even today, but a little while ago. But we have Christmas season coming up. November is coming up, Thanksgiving and things of that nature. If we're basing a lot of this based off of speculation, are your Walmarts, your Targets, things that nature that are already in the S&P, are they just not kind of like nice add-ons if their price goes up? Because essentially, if we're saying this for what it's worth, and saying that like 80% of the stocks in the S&P can go low, but the S&P will still rise because of the top 10% stocks, then do earnings necessarily matter for anybody who isn't tech at the end of the day?
Mm.
And for what we're seeing right now, is it primarily based on what tech is doing and pushing us further and further up to the point where, yeah, it'll have to be another like tariff announcement to an extent. But we've had some minor ones with China just recently, and it hasn't done too much damage at the end of the day. Like, what will it have to be in order for stocks to come back down? Is it something that has to be announced to the public, or is
Yeah.
it then more so, I guess, clandestine, right? Where we're
Mm.
saying, nah, it's just gonna be a certain level that has to be hit, as you pointed out with how you're putting the fib on the chart, where it's more speculative. We're just hitting a certain level, and we just say, hey, nah, this is a high, and we're gonna start hitting some lows and find an area that's better to buy back. So I don't actually I'll actually take away from your analysis on us coming back within that range below 22K at the end of the day. I actually think that's pretty phenomenal. That we somehow, subtract almost 6K. I mean, we've done that before, right? Right when Trump was elected, we were at about 22K. Then we dropped down 6, and then we went back up 10 at the end of the day. Like that,
Yeah.
if you knew where to put your money at those times and knew when to sell off and when to get back in, you're solid. You're
Yeah.
doing very solid.
I
But are we
think
reaching levels? Yeah.
no, I think we are. I think we are reaching levels. I mean, again, so the way I kind of look at the market is, I mean, and I guess this is how pretty much everybody looks at the market, but there's buyers and there's sellers, and then there's sellers who have to become buyers uh, to close out their position. So essentially, everybody is a buyer at some point. If you in the market, you will be a buyer. So when I look at a move like this, when I look at a move like this, for example, right, I'm looking at this as everyone wanted to be involved in. buying right here. Whether it was people who were short, they ended up getting, uh, let's say, let's say they started their short somewhere around here, and they was able to capture what 20%. They was able to capture 20%, a 20% short. So in that regard, okay, now it's time for me to close out my position. It's a good time. I'll close out down here at that 20%. Buyers, they also recognize, okay, maybe this is a good time for me to buy. We're on average, stocks are 20% cheaper than they were just a few weeks ago. So you have buyers jumping in. You also have sellers who have to become buyers at these levels. So I think what could be happening in some cases, and what I think happens in a lot of cases actually, is something that looks like this, where we have situations like this where maybe we were supposed to crash and you had some folks that shorted right here and they were short right all the way through here thinking, okay, I'm gonna hold it into it. And maybe you have more people that kind of piled into this short right here. And because they piled into this short, when price happened to get above this level, they have to close, which creates this squeeze, which gives us an opportunity to go higher. So again, what you kind of see in this is price comes back down because we don't actually have buyers that really want to buy at this level. It's not that it looks attractive at this level. It's just that there's no buyers here. So when price eventually comes back down and anyone who's shorted right here, they don't want to be underwater and they want to make profit. They say, okay, well, let's actually close out these positions and at least I make a profit or at least I break even, whatever it is. So they get squeezed out. Some that can, eventually buy and get out that position, they'll buy at this level, right? To reduce the amount that they owe. And it creates another squeeze for another leg higher. So I do think in some ways, what eventually needs to happen and what would make a fairer market is if we didn't have short sellers, if we had people that truly really wanted to buy and hold for long term and sell when things really were screwed up, right? That's really what would allow us to see a true market, not where you had speculative um, movement in the stock because someone wanted to sell, and now it has to move up because you have a ton more people that need to buy right here, and you also have people who want to purchase at this level. And so I think that's what's exacerbating these moves is because not only when you look at, I mean, obviously part of it is the NQ, and when you look at SPY, it's the same thing. Obviously, you got a lot of those cap weighted funds a lot bigger, having more weight on the underlying instrument. Um, but I mean, again, when you look at a move like this, you had a push down, consolidation. Maybe you had shorts that wanted to initiate shorts down here, and now you're just getting this squeeze. So they're getting squeezed. Now it's a matter of, okay, no one really wanted to buy up here. They'll wait for price to come down. And when it does, anyone who wanted to buy or anyone who shorted right around here to either break even or collect some type of a profit, I would suspect that they would become buyers around that 192 level. And I would assume, hopefully, they mostly have probably initiated shorts right here, and they're probably adding into the shorts right here. So as it does come down, their average cost is being reduced, and they're able to then take profit at this level to capture this. Um, I guess whatever drop this will be, it'll be about an 8% drop. So maybe their average price is around 201, and so if it drops below to that 97 potentially overnight, whatever it is, and they can collect some money off of it and just kind of be done. But again, they trade in a lot of shares, um, and we could see a pushback down. But then again, the question becomes, all right, so when we do see that pushback down, what eventually happens, right? We could see more movement to the downside before we eventually see a squeeze right back up. So just like Nvidia, as Nvidia comes down, we'll come down, we'll potentially fill this gap, and we'll just go right back on up. So
Yeah, I hear you because it works out that way. Because to your point, I mean, when something's too high, it's time to sell. And for the most part, we've done that consistently. Get back into an area in which shorts are covering their positions. To be like, all right, let me take at least a little bit of profit before it goes back up and blast me out the ass kind of thing. Um, we just saw a jobs report not too long ago from Amazon talking about them cutting about 30,000 jobs, right? And
mhm.
the big thing there is that again, these are the after effects of what happens when AI and automation actually start to become come into play. Like it's not an actual dream, nightmare to be more accurate. It's an actual certainty. Like people are losing jobs, we're actually automating things, which in one respect you're like, that is actually a it actually should be looked highly upon in terms of our human existence here, that we could collaborate on such a scale where we can utilize AI to automate certain things in houses, homes, shoot, the job, the workforce, so there's not as many tedious jobs at the end of the day because of the tedious tasks that are necessary for any particular job. But it again raises questions in the back of the mind of the average retail investor when they start seeing stuff like this, because, well, for one, if you're not a person who has money in the stock market, right? So you're just listening to us speak on TikTok, you don't have money in the stock market, you may not necessarily care for how high the sky is, right? At the end of the day. And in one respect, that's fine. But in another respect, I wouldn't even say it's off putting, but it's kind of scary. Considering that if you're just a regular person on the street, no investments, at the end of the day, especially in the stock market. So it's not saying that you're not investing at all, but no investments in the stock market. Um, when you look at jobs around you get depleted. You find out that no, they're moving more towards AI in terms of certain jobs, right? Things of that nature. It begins to beg questions about, well, what skill set is going to be necessary to continue being relevant in the future? Because, say, for instance, I look at something like this and I'm like, well, all right, fine. You may not have to care, but if you're an employee of something like a Walmart or a Target, you've already started to see that they've started, taking away certain aisles in the actual market itself, the Target or Walmart, because they're saying, all right, we're going to do more automation in this area, or we're going to use more robots, right, to scan your foods and everything like that. So you don't necessarily have to have a person at the counter, basically taking your food, bagging it, and everything like that, and continuing forward. And if we're seeing some type of, how can you say this, some type of glimpse into the future off of what is going on right now, I would be intrigued. I'd be mortified if more people weren't seeing more of the jobs that seem quote unquote easy being replaced, and them not having the skill set to get something. I mean, we're at a point, right? And mind you, gonna date this live is October 29th, 2025, just as reference, because we are now in a time where the government is shut down. There's a vast many people who are, SNAP benefits, who will not get SNAP benefits at the
Mhm.
and is not likely having gone through this before, right? at the end of the day. We've seen this before. Government shuts down, SNAP benefits hard to come by. Almost same story year over year every time Congress is infighting at the end of the day. But what we're also seeing a little bit of a rise of is that these same people may not have the skill sets to obtain jobs like they possibly could in the past. Where, say, for instance, maybe there's a data entry role, there was McDonald's roles, regular, almost you could say low wage jobs that were still relevant, that they still could potentially pick up, those will possibly be non-existent moving into 2030. So
Oh yeah.
the question then becomes, you don't have to pay attention to the stock market, you don't even have to care about these charts, but the idea is to care about the businesses who are winning at the end of the day based off of what we're saying right now. Because if you start to find out that you don't have an electrical background, a mechanical background, a hands-on type of background in anything, right? What's your fallback plan? An odd job, maybe the gig economy. We're seeing that become an issue too, right? Because now you're
Yeah.
starting to see there's more that same automation and AI that we're talking about is starting to be implemented in cars. That's one thing. But when it starts happening that you're was it driverless cars start becoming the thing for Uber moving forward, right? They're gonna probably call out safety and saying that it'd be a lot better for individuals to feel safe if they happen to get in a car that didn't have a driver. But what you're also finding out is that that took away a job from somebody who
Mhm.
utilized it as a way to pay rent. And so what you thought would have been a decent low paying, I don't have, or a decent paying, I don't have to interact with people on a daily basis like that type of job now becomes something that you don't actually have the skill sets for because there's something that can do it better that's not even human. So the reason why I even ask all these questions and I'm even making these things points is because there's a there's a particular crisis that is happening that is not seeming like a crisis in the news, where jobs that technically didn't require like a that didn't require a degree to actually get may not even be relevant or a thing going into the future. Like you really are going to have to go and figure out how to start welding. You really will have to start getting an electrical background to make sure you
Mhm.
maintain these data centers, right? Before they start putting out robots that can do the stuff themselves. Maybe that's another thing. Another skill set is figuring out how to do robotics. Like it begins to start playing on the idea because I'll take it back as far as the early 1900s, right? When we started moving into the industrial era and we started actually utilizing cars more, right? Nobody needed a horse for real. So you
Yeah.
didn't have to
True.
have people who train horses around or people who had, horse feed for you. So moving into that era, there were certain jobs and skill sets that weren't required anymore. Now, if you have a horse, right, it's something to say, oh, you got extra money on hand
Mhm.
because horses take time in order to raise. They take feed. You can't keep them out in the cold, things of that nature like that. Like it required a different set of skills to be able to survive in the early 1900s and late 1800s. And so when we're moving into like close to the was it the mid 2000s, and we're starting to talk about 2030. Well, what jobs will become irrelevant? What jobs will still be relevant while market cap size for like your Amazons are going up, but the jobs are decreasing. Like it, we're finding out CS students, computer science students, are having a hard time even getting jobs now. Mind you, they're the ones who are being looked at highly upon when Amazon and Netflix and your Googles and everybody like that was like, hey, we need more CS students, we need more coders. At it
Mhm.
was a real skill set. Now, you as a regular person, can build an app in seconds, minutes.
In seconds.
Man, that changes the entire game of how things actually go in terms of economics, because now skill sets don't need to be specific to something that you took 5 to 10 years to learn. Nah, you could basically prompt an AI tool to make you something that really should be costing you $100,000 to build out. So what it tells me is that with an economy like this going up so high as it is, in terms of just the market, not the economy, but the market, so two separate entities. The market going up as high as it is, with certain companies as the forerunners of these markets, like the NASDAQ, should be your top 100 companies at the end of the day. But if you come to find out that a good 80%, 80 of those companies are actually doing bad. So you mean to tell me is the top 10? You mean to tell me there's a certain group of these companies that are running amok at the end of the day? So it brings into perspective what exactly and what amount of money it's going to take to actually survive in the next 5 to 10 years. And what people
Hmm.
thought, they could live off of in terms of Social Security, I mean, even during a government shutdown, it is almost an idea out the door. You can't say that, oh, I'm getting Social Security, I should be fine. That idea has gone null and void within like the last 5 to 10 years. So it's almost to the point where even our elders are going to find it hard to survive in the next 20 years at the end of the day. And without the proper skill sets, and the proper what is it, ideas about entrepreneurship and how to make money, um, you will be ass out. What we're seeing right now with job layoffs, market's still in a very great spot. Matter of fact, a magnificent spot, and people are struggling. Shows that there is a big disconnect between what's going down in fundamental economics and what's happening in the market. And if the market has anything to say about it, where it's still going to go up because they're actually going up by reducing sizes of companies, then we should be scared. We should be somewhat frightened that we don't have the skill sets enough to make the money that's adequately going to allow us to live off of the increases in prices, increasing the just standards of living that are going to come within the next 5 to 10 years, much less 20 to 30. So I asked those questions, right? I asked those questions about us moving up to the 30K because at one point things stop becoming as technical for me as it becomes more realistic in terms of what am I seeing on the ground. Um,
Yeah.
People are going to struggle. And because companies are laying off to meet certain overheads to look good at earnings, I mean, hell, they're talking about doing earnings twice every year instead of 4 times. My days. That saves companies a lot of extra time to have to worry about, well, what do I need to do in order to beat last half of the semi annual goal at the end of the day? They report semi-annually, so it becomes a little bit more fickle in terms of what is it, times in which markets could become lower. And if there's times where you can't even predict to say, well, I think Amazon is going to raise up in the next 6 months. Yeah, over the course of 6 months, they could flip flop up and down. But if they
Hmm.
look good, better than what they did the last 6 months, right? The last time they had earnings. I mean, hell, that's more money to them. So it almost becomes a thing less about, well, what did they do in terms of earnings as opposed to did they just beat the earnings that they did the last 6 months.
Hmm.
Yeah. So and like I said, the reason why that matters is because it won't matter how bad what is it, Amazon did in 3 months time. Did they not meet their what is it, shipments and what is it, orders at the end of the day? As long as they just did a percent better than what they did in the last 6 months, it's going to do all the business for people to say, well, they did better though. Let's put more
Hmm.
money into them. kind of thing. Let me see where this bad boy rises. So I don't know. Again, it goes back to speculation. Because I can
Yeah.
talk my shit for 5 hours, a whole day, whole week. But what we're actually saying is real. Um,
Yeah.
26K, bro. 26K is where we're at.
26K is fucking crazy.
And
Every time I hear that shit, it's like,
we
how?
were
How the hell
we were,
did we get this damn high?
we were 16K in April. So you mean to tell me since April to now, we haven't been a full year. We haven't been no more than 6 months, 7 months. And you mean to tell me we raised up 10,000 points in the NASDAQ?
2000. Yeah. 2000 points.
10K is crazy. 10K is crazy. Because you know how long it took us to raise 10K over the last decade? Man,
Man.
I mean, is those type of things in comparison, right? I mean, we haven't seen numbers like that run since shucks, since 2020. And that again, that should scare people, right? At the end of the day, we haven't seen runs like that since 2020. And it took us from March 2020 all the way to what is it, close to about a year, and some months, right? Year and about 7 months to be able to reach about 10,000 points in the NASDAQ. And it only took us about 6 to 7 months this time around. So it goes to show that if this is going to be kind of the, I guess, kind of the layout of how we expect prices to go down, go up over the course of the next 5 to 10 years, like don't expect very slow turnarounds. Matter of fact, to be fair, expect high turnarounds. Expect high turnarounds in a very short amount of time and to be priced out of anything outside of taking micros on trades like these for the rest of our time on this earth, because we're never seeing 6,000 again. I tell you,
Oh yeah, hell no.
there will have to be atomic bombs, nukes dropped on countries, especially first world countries as we have it, in order for some stuff like that to happen again. So, all that to say, if you're not paying attention to the market, I really hope that you find it in your heart, in your mind, in your gut, in your reality at this present moment to at least pay attention to the economy and the market at the same time. Why are things happening the way that they are? Why are we seeing prices that the way that they are? Because I know my guy Coop right now can give you all the technical analysis right now to tell you when pullbacks are going to come. But if you don't see how fast we've risen in a matter of 5 years since the pandemic, since the pandemic, this could be a very odd world to invest in later on. You will you
Yes.
will have to do micro investments at that point in time. Invest what you consider your dollars as quote unquote pennies, to be able to get into a lot of these stocks. And mind you, I know that Coop and I, we could talk to you all day and say, this is a certain trade funded trading account that you can get into to potentially make some money in, so that you actually are not just paying attention but making money from the market with sizable accounts. So we'll definitely keep you posted about the various accounts that we use in order to trade. We'll also trade with you, to show you exactly how we're doing it ourselves. But the main thing, at least from today's session, is to let you all know that the market is where the money is. You can start your own business, and I think that's well to do. You can do all the things that we thought would be instrumental to make sure that our futures are secure. What we're coming to find out is that the people, in terms of like your boomers, their future is not secure. The Gen Xers, their future is not secure. Shoot, millennials and everybody else then after, futures are not secure when you look at how much money is already being put into the market, and how much money clearly is being made, and how many people don't have any of that. don't even have knowledge, don't even want to care about what we're saying or where we're going. So take that for what it's worth. Um,
Yeah.
yeah, cool. Back to you.
Nah, that's. I mean, you summed it up. You summed it up perfectly. I mean, I know we can sit here and we can talk till we blue in the face for real. And I know, we had these conversations all the time. Offline. But I do think that it's important that as we kind of learn and sort of do our due diligence and research that we obviously we share with the community. And I know that's the goal. That's one of the things we kind of talked about, is just like, as information comes into us, making sure that we can share it out with the people, and get them as informed as we can. So yeah, I mean, I think with that, I'm cool with wrapping it today. I know I'm probably gonna take a few trades with this overnight session. I know Microsoft just reported earnings, so I'm expecting a little bit more volatility than what we're getting right now. Also looking at gold kind of spike up, funny enough. And one of the other things that I know, you know, I think with trading prop firms, this is one of the things that I wanted to just kind of touch on too. Is like, one of the when I'm trading prop firms, holy snap, look at gold just come down like that. Man, I was thinking about taking a loan. Uh, but yeah, with trading prop firms, I think one of the things that I'm realizing too is, because I know you had brought up the idea of trading and all that good stuff. And one of the things that I'm realizing with trading prop firms is, and you preach this, it's important to have your own capital when you are trading prop firms as well. And so the end goal is not necessarily to, I mean, obviously the goal is to earn from prop firms, but the ultimate goal is to really get your own capital and start making trades and earning as well. So just wanted to shout that out. And yeah, I know, again, we kind of talk till we blue in the face, but with that, I'm cool with we're calling it today. And yeah, we can make this a weekly thing or a daily thing, and we can uh, we can jump on and go live again.
Oh, absolutely. And just as a last parting touch right here, consider looking at the price of Bitcoin and gold at the present moment. If you see, Bitcoin has somewhat been trending with our markets over the last couple years. So if you look at when we did a major dip back in 2023, it has been somewhat in line with where our Nasdaq is at the moment. I know gold has been rallying for quite some time now. So if you're one of those people in the early 2000s that happen to get gold at a price of $200, shouts out to you. Shouts
Hell
out to
yeah.
you. $200 an ounce. Oh my days. Because to see gold at about $4,000 now is, it's not insane considering how far we've gone up in prices with the Nasdaq and as well as Bitcoin, but it does beg questions of where all the money is going. It asks questions of, well, are we not seeing foreign dollars come into our market at the end of the day? Um, because again, the price of gold again can be traded from multiple different angles by various different entities. Same way with Bitcoin. So it's not hedged on you being American and pledging loyalty to America to be able to trade in a couple of these outside currencies. And so the I want to say, for the people who invest in the American stock market, don't be wary. Just consider it an opportunity that there are other things out there to consider investing in. We make it almost seem crisis like for the Nasdaq and a lot of the U.S. stocks, but there are minerals that you can invest in. There are commodities like soybeans, things of that nature that can be invested in. A lot of that stuff is more seasonal, but we're also seeing very large price increases in those things too, which is also adding to why you could see price increases for a lot of the local things that you see at your local stores at the end of the day. And why, say, for instance, your Walmarts and your Targets, as mentioned earlier, are going up as well. So consider that other investments, part of your portfolio, are going to be good hedges potentially against, say, for instance, things like the NASDAQ, but also be wary because if you start seeing that there are things that trend together, they can fall together as well.
Mhm.
So be cognizant at the end of the day. But yeah, as Coop mentioned, we will do this if not every day, every week, and we'll make sure that we try to give you the highlights of what we're seeing in the market. And from that standpoint, we'll also give out good analysis or at least adequate analysis on how you can bankroll some of these trends in terms of them going long or going short at the end of the day. So stay tuned
Yeah.
with
Yeah,
us.
definitely. Yeah, and I do want to call out not to, get too far ahead of myself looking at tomorrow's trading day. But I am seeing that we did get a nice wick up to this the body of this previous day candle, and we are kind of putting in a rejection into it right now. So what I would like to see if we do continue to sell off is in fact that we don't hold this 79 level and then we end up coming back down. So I probably will take a couple trades today. What I do know or notice as well is that it is pretty tight compared to this range. So this is a pocket that I'll probably try to stay outside of. Is this what is it, that 60 through 80 level? Just kind of waiting to see what price really wants to do outside of these ranges because yeah, I think we could have a sell off, but how we get there is kind of tough to kind of call it. So
Well, I can definitely tell you this is a lot better than what is it in some cases. A lot better than gambling at the end of the day. Either 50-50 at the end
yeah,
of the day. And for the most part, this is the stock market. So yeah, you're probably going long, if anything, especially for the long term. So consider that too. When you're too high, you may be too high. You don't want to ride out to the sky. But if you come down short, you got opportunity to buy. So continue working with us, continue following us, listening in on what we got going because we definitely gonna make this interesting. We're definitely gonna make sure we not just bring you a technical basis, but we also give you some fundamentals, some understanding on exactly what's also happening around the world too. That is perpetrating some of these really big increases in price. So stay tuned.
yeah, cool. With that, I'll cut it and we catch y'all later.